You've been keeping up with the markets, right? Trying to figure out what's going on.
It's a lot to process.
Yeah. And today we're diving into the EQAI Morning Briefing, the one from November 15th,
Okay.
2024, of course. We're trying to help you see the bigger picture here. We'll be looking at what's driving the trends in the market, everything from inflation,
Back to crypto.
yeah, crypto, retail sales.
Even what it means for the rest of the world.
Exactly. Get ready. It's going to be interesting.
Yeah, it's definitely interesting. What's catching everyone's eye right now is the difference between what's happening with the usual markets.
The traditional market.
Right, and then what's going on with crypto. So we've got major U.S. indices, like the S&P 500, it's down.
How much?
0.67% at 5,949.
Oof, that's not great.
No, it's not great. And the Dow Jones not doing much better.
Is it down to?
It is 0.64% down to 43,750.
Yikes.
Yeah, and even the Nasdaq, the tech-heavy Nasdaq, down 0.77% to 19,107.
Yeah, seeing numbers like that can be a little scary, especially if you've got
retirement savings tied up in there.
Yeah, exactly, like me. And then you see how Bitcoin's doing, and it's a totally different story.
Oh, yeah, total opposite.
Right.
Yeah. Bitcoin is surging, up 3.35%.
Wow.
Breaking through the $90,000 mark.
What, over 90,000?
Yeah, to 90,234. And even Ethereum is up 1.44%, so reaching 3,102. It's a big difference.
Huge difference. So what's the deal? What's causing these markets to, go in such opposite directions?
Well, it seems the main thing that's spooking the traditional markets is inflation. We got some recent data, and import prices are going up. Actually, they're rising at the fastest rate we've seen in 6 months.
Oh, wow.
And it's mostly because of rising fuel costs. And that's feeding into what we're all seeing, those higher prices at the pumps.
Tell me about it.
And at the grocery store.
That's everywhere. You feel it everywhere. So investors are getting nervous. I mean, makes sense when you see those big indices dropping like that. But what about Bitcoin? Why is it doing so well when everything else seems to be struggling? Are people, ditching their savings accounts and going all in on crypto?
Well, it's not quite that simple, although there's definitely more and more interest in digital assets. The way Bitcoin is going up suggests that some investors are betting on it as a way to protect themselves from inflation.
A hedge.
Exactly. You see, because cryptocurrencies are outside of that traditional financial system,
Right.
some people think they're less affected by what central banks and governments do.
Makes sense. So, if inflation keeps going up.
They're hoping Bitcoin will hold its value better than regular currencies.
So it's almost like a digital gold rush.
Kinda, yeah.
People are looking for something that's going to hold steady. But what about the average person? Just trying to make ends meet? Maybe do a little holiday shopping?
Right.
Does this mean we're all going to have to tighten our belts and forget about gifts this year?
Not necessarily. There's some positive news. October retail sales actually went up.
Really?
Yeah, defying all those worries about inflation. This could mean that consumer confidence is still pretty strong and the economy, it still has some steam heading into the holidays. People are still out there spending, which is a good sign.
That is a relief to hear. Maybe I won't have to cancel that trip to see the family after all. Speaking of travel, though, what's going on with energy? I mean, with fuel prices so high.
It's definitely impacting things.
Yeah.
Yeah, the energy sector is facing some headwinds. We're actually seeing oil prices going down.
Really? They're going down?
Yeah, heading for a weekly decline. And there are a couple of reasons for that.
Okay.
First, the U.S. dollar is really strong right now, which means oil is more expensive for other countries to buy. And second, China, which is the biggest importer of crude oil in the world.
Wow.
Their economic growth is slowing down, so there's less demand for oil. And those two things together...
It's pushing prices down.
Exactly.
I'm starting to see how all these things are connected. It's like a giant global economic puzzle.
It really is, yeah.
But with all this uncertainty, are there any bright spots?
Oh, yeah, there are.
What about manufacturing?
Manufacturing is actually doing pretty well, especially in the New York region. The Empire State Factory Gauge... It measures how healthy the manufacturing sector is. Well, it surged.
It surged?
Yeah, up to 31.2.
Wow.
It's the highest it's been in almost 3 years.
That's great.
So it looks like manufacturing is on solid ground. It's likely because of the strong domestic demand and the supply chain problems are easing up. Those have been a real headache for the industry.
Yeah, I can imagine. So it sounds like while some sectors are struggling, others are doing pretty well, even thriving. Definitely mixed bag out there. But how does all of this affect specific industries like tech, energy, and finance. I'd love to know how they're navigating all of this.
Sure, let's look at those. The tech sector, as you can see with the Nasdaq dip, they're worried about high valuations and the possibility of more regulations.
Right.
But long term, things still look positive.
Okay, good.
Yeah, because of all the innovation happening and the fact that, everything's going digital these days, tech companies are pretty adaptable, constantly changing.
Makes sense.
So they'll probably find a way through these challenges.
So short-term jitters, but overall things are looking up.
Exactly.
Now, what about energy? Are we all going to be using green energy soon, or is there still a place for oil and gas in the future?
Well, the energy sector is definitely going through a major shift. Traditional oil and gas companies,
Yep.
they're facing some tough times because of worries about climate change and the push for cleaner energy.
Right.
But the switch to renewable sources like wind and solar, that's really picking up speed. This doesn't mean that oil and gas are going to disappear overnight,
Right.
but long term, it's clear. Renewables are the future.
Okay. And for those of us who aren't energy experts, what does this all mean for investing in energy? Is it all about green energy now, or are there still good opportunities in the traditional energy sources?
It's a good question. It is getting more complex as we move towards a more sustainable future.
Okay.
There's a lot of excitement about renewable energy and a lot of investment going into it. But traditional energy sources, they'll still be around for a while.
Okay.
For investors, the important thing is to understand what's happening and diversify their portfolios.
So you don't have all your eggs in one basket.
Exactly. There might be opportunities in both traditional and renewable energy, but you got to do your research and think about the long term.
Got it. Research and long-term thinking.
Mm.
Now, what about finance? How are banks and investors handling this volatility, especially with inflation still a concern?
Yeah, well, the big challenge for finance right now is all the uncertainty about interest rates.
Makes sense.
With inflation still being a worry, central banks might have to raise interest rates sooner than they planned. And if that happens, it could make borrowing more expensive for businesses and consumers
Right.
and potentially slow down the economy. So financial institutions, they need to be really flexible and adapt to this constantly changing situation.
Yeah, it sounds like everybody's walking a tightrope right now,
Yeah.
trying to balance risk and opportunity.
Mm-hmm.
But how does all of this play out on a global scale? We've been talking about the U.S. market, but what about the rest of the world?
Well, that's a crucial piece of the puzzle. Rising inflation in the U.S., it doesn't just stay here. It can have a ripple effect across the globe. When the U.S. Federal Reserve tightens monetary policy, like raising interest rates, it can affect how much money is flowing around globally and how capital moves, and that could be a problem for emerging markets.
Okay.
It could lead to capital flight and their currencies weakening, which could then hurt their growth. It's all connected.
So what happens in the U.S. doesn't stay in the U.S.
It really
Yeah.
doesn't.
It affects everybody. What about specific regions like Europe and Asia? How are they being affected by all of this?
So Europe has its own set of problems: geopolitical tensions, economic uncertainty because of the energy crisis, and the war in Ukraine. A lot depends on what the European Central Bank does, how they deal with inflation. That'll be a big factor in shaping their economic future. There's a lot of uncertainty, and policymakers have some tough decisions to make.
Yeah. And what about Asia? China's slowdown? That must be having a major impact.
Oh, absolutely. China's slowing growth is a concern for markets worldwide.
Yeah.
They're such a big consumer of commodities and a key player in global trade.
Right.
Any slowdown there can send shockwaves through the whole world. It affects demand for raw materials, and it can change global trade patterns. It's definitely something to keep an eye on.
It really does feel like there are a lot of moving pieces right now,
There are.
both here in the U.S. and globally. It's enough to make your head spin.
Yeah.
But let's bring it back to the individual investor, you and me.
Yeah.
We've talked about market trends, economic indicators,
Right.
all that. But what does it all mean for our own investment strategies? What are the smart moves to make in such a complicated environment?
Well, that's the million-dollar question.
It is.
The key takeaway here is diversify. Don't put all your eggs in one basket.
That's what my grandma always said.
Yeah, well, she was right. Having a balanced portfolio with a mix of traditional and alternative assets, that's how you navigate uncertainty.
So a mix of stocks, bonds, and maybe even some crypto. How do we find that balance?
Right, so while stocks have been a bit volatile lately,
Yeah.
they still have the potential for growth, especially in sectors like technology and healthcare. They're driven by innovation and long-term trends. Fixed income investments, like bonds.
Yeah.
They might face some challenges because of rising interest rates.
Ah.
But there are still opportunities out there for smart investors,
Hmm.
especially in things like high-yield bonds. They offer higher returns, but they also carry more risk.
Higher risk, higher reward. And what about crypto? Is it a safe haven or a gamble?
Well, cryptocurrencies can be a really exciting addition to your portfolio, but you got to remember, it's a volatile space. Don't invest more than you can afford to lose. Do your research, understand the technology, be aware of the risks involved.
Be smart.
Exactly. It's best to start small, dip your toes in,
Test the waters.
and then increase your exposure as you learn more and get more comfortable.
So be cautious, especially when it comes to crypto.
Yes.
Well, before we wrap up this part of our deep dive,
Okay.
I'm curious about your take on something bigger. We talked about traditional markets versus the rise of crypto, the impact of global events, and the importance of diversifying.
Uh-huh.
So, given all that,
Mhm.
what do you think the future of finance looks like? Will it be dominated by digital currencies and decentralized networks? Will AI be our financial advisor? Or will traditional institutions adapt and stay relevant?
That's the question everyone's trying to figure out. It's a fascinating time to be in the world of finance.
It is.
We're witnessing these huge changes and trying to predict what's next. There are no easy answers. But talking about it, staying informed, and being open to new possibilities, those are the keys to navigating the financial landscape of the future.
Those are good points. We've got to stay engaged and keep learning.
Absolutely. Yeah, it's a really dynamic time for sure. All these trends we've been talking about, they're really changing the game in ways we're only starting to grasp.
Exactly.
Yeah.
We've kind of laid out the big picture, but let's zoom in a bit. What advice would you give to someone trying to, make sense of all this and make good decisions with their money?
Well, I think the most important thing is to understand what's driving everything.
The forces at play.
Right, and adjust your strategy accordingly.
Mm-hmm.
For example, if most of your investments are in tech stocks,
Yeah.
you might want to think about branching out.
Diversifying.
Yeah, into other sectors.
That might be less affected by things like, interest rate hikes or new regulations.
Exactly, spreading the risk. But for those of us who aren't, financial experts, how do we even start diversifying? It can be overwhelming.
Yeah, it can. It's like, where do I even begin?
That's where a financial advisor can be really helpful.
Okay.
They can help you figure out how much risk you're comfortable with.
Your risk tolerance.
Right. Understand your financial goals and come up with a plan that's tailored for you.
An investment strategy that fits your needs.
Exactly. It's like having a personal trainer for your finances.
I like that analogy.
Yeah.
But what about those of us who are, intrigued by crypto? It's tempting to jump on that Bitcoin bandwagon, but is that really a wise move?
Well, cryptocurrencies can definitely be a good addition to your portfolio.
Okay.
But you got to remember, it's volatile.
Yeah.
Don't invest more than you can afford to lose.
Yeah.
Do your research.
Understand the technology.
Yes, understand the technology and be aware of the risks. It's always best to start small.
Dip your toes in the water.
Exactly, and gradually increase your exposure as you learn more and feel more confident.
Don't go diving headfirst into the deep end. Okay, so start small, learn as you go, but let's zoom back out again to the big picture. We've been talking about inflation, interest rates, global trends. How can we connect the dots and see the bigger picture?
Well, that's where critical thinking comes in. Don't just follow the headlines or get caught up in the hype.
Right.
Take a step back, analyze the information, and ask yourself, what's really driving these trends?
The underlying causes.
Right, and how could they affect me in the long run?
Be a financial detective.
Exactly. It's about looking for clues, connecting the dots, and not being afraid to ask questions.
I like that.
Yeah.
So what are some key questions we should be asking ourselves as we, navigate this crazy financial landscape?
Let me give you a few to think about. What are my financial goals, both short-term and long-term?
Okay.
How much risk am I comfortable with? How should I divide my investments between traditional assets and alternative investments?
Stocks, bonds, crypto.
Yeah, and how can I stay informed and adapt as the market changes?
Good questions. It's about finding that sweet spot between, risk and reward,
Right.
short-term gains, and long-term stability.
Exactly.
But most of us aren't just watching the markets from the sidelines. We're actively participating, whether it's through our retirement accounts or individual investments or even just our daily spending habits. So how can we be more mindful, more strategic in our financial decisions?
It starts with becoming aware of your habits and your spending patterns. Track your spending, make a budget, and see where you can save more or invest more effectively. And don't forget about the power of compound interest.
time is on our side,
Exactly. Even small, consistent contributions over time.
like planting a seed.
Yes, like planting a seed and watching it grow into a big tree.
But we got to remember those external forces we've been talking about.
Uh-huh.
How can we stay ahead of the curve and anticipate potential shifts in the market or economic downturns?
Staying informed is key. Read financial news, follow reputable analysts and economists, and pay attention to what's happening in the world that could affect the markets. But don't let fear or panic control your decisions. Remember, markets go up and down.
It's a cycle.
Yeah, the key is to have a good plan and stick to it, making adjustments as needed.
It's easier said than done when you see those headlines about market drops.
I know, but having a plan and staying informed really helps you make rational decisions, not emotional ones.
Exactly. Speaking of emotions, let's talk about the human side of finance. It's not just about numbers and charts. It's about people and their dreams and anxieties and their financial well-being. How can we approach finance in a more human-centered way?
That's a really important point. Finance can often feel cold and impersonal,
It can.
but it's really about people's lives and how we use our resources to achieve our goals and dreams. So when you're making financial decisions, it's important to think about the human impact. Supporting companies that align with your values or exploring socially responsible investing, these are ways to align your money with your ethics. And remember, financial well-being isn't just about how much money you have.
Right.
It's also about feeling secure, having freedom, and having peace of mind.
I love that perspective. It's about making our financial decisions work for us, not just in terms of money, but also in terms of our values and goals. But with all this talk about strategies and global trends, it's easy to get lost in the details. What are some key takeaways our listeners should remember?
Here are a few essentials. Diversify your investments across different types of assets. Stay informed and adapt as the market changes. Get professional advice if you need it. And most importantly, don't panic. Markets go up and down, but having a solid plan and focusing on your long-term goals, that's what will help you weather any storm.
Great advice. We've covered so much in this deep dive.
We have.
From understanding market trends to exploring the human side of finance. But before we wrap things up, let's look ahead. What are some new trends or technologies that could change the financial world in the coming years?
Well, one trend that's definitely worth watching is the rise of decentralized finance, or DeFi. This refers to financial applications that are built on blockchain technology.
So kind of like cryptocurrencies, but bigger.
Exactly. The goal is to create a more open, transparent, and accessible financial system.
Sounds revolutionary, but also a little intimidating.
It is.
What are some of the potential benefits and challenges of this DeFi movement?
Well, DeFi could really shake things up in the traditional financial world by offering faster, cheaper, and more efficient services. For example, imagine being able to borrow or lend money without going through a bank, or access financial services without needing a traditional bank account.
Wow.
This could be especially helpful for people who don't have access to traditional banking.
Yeah, that's huge. It's about financial inclusion. But what about the risks? Is it kind of like the Wild West out there in the DeFi world?
Well, like any new technology, DeFi has its risks. Security vulnerabilities, uncertainty about regulations, and the potential for scams.
Right.
These are all things to consider.
So proceed with caution.
Exactly. Do your research, understand the risks before you jump in.
Excitement tempered with caution.
That's a good way to put it.
Yeah. So what other financial innovations are on the horizon? Any futuristic predictions you want to share?
Well, artificial intelligence is transforming so many industries, and finance is no exception. We're already seeing AI-powered algorithms being used for things like fraud detection, risk assessment, personalized financial advice, and even investment management.
It's like having a robo-advisor.
It is.
It manages your investments, anticipates your needs, helps you reach your goals. That's incredible.
It is.
And a little bit scary.
It can be, yeah.
What are some of the ethical considerations with all this AI in finance?
That's a good question. As AI gets more sophisticated, we need to think about potential biases.
Okay.
Make sure things are transparent and accountable, and guard against unintended consequences. The goal is to use AI's power responsibly and ethically. It's complex, with a lot to consider.
Well said. Technology could be a powerful tool, but we got to make sure we're using it wisely. We've covered a lot today.
We have.
From understanding market trends to the future of finance. But before we go, let's take a moment to reflect. What are some key insights listeners can take away from our conversation?
I think the most important thing is that staying informed and being able to adapt, that's crucial in today's world. Don't be afraid to question things, ask questions, and seek out different perspectives. There's no one right way to approach finance. What works for one person might not work for another. The key is to find what aligns with your own goals, values, and risk tolerance.
Be curious, stay informed, and be true to yourself. Those are great principles.
They are.
But before we say goodbye, let's leave our listeners with a final thought-provoking question. We've talked about traditional markets versus crypto, the impact of technology, and the importance of making human-centered financial decisions.
Yeah.
So, here's the question. What do you think the future of finance looks like? Will it be all about decentralized networks and digital currencies? Will AI be calling the shots? Or will traditional institutions find a way to adapt and evolve?
That's a question that deserves a lot of thought and discussion. There's no easy answer, but having these conversations, staying curious, and being willing to adapt, those are the things that will be essential as we navigate the financial world of tomorrow.
And remember, the future of finance isn't set in stone.
No.
It's something we all shape through our choices, investments, and our vision for the future. Yeah, it's a pretty exciting time to be thinking about all of this. So much potential for change. And we all have a role to play in shaping what that future looks like.
It is, yeah. The future of finance isn't just something that's going to happen to us. It's something we're building with the choices we make.
We've covered a lot of ground, haven't we? Exploring the forces shaping the markets, the challenges and opportunities facing different sectors, the global ripple effects of all these trends.
We have.
But I think one of the biggest takeaways is that when we understand these dynamics, we can make better, smarter decisions.
Absolutely. Knowledge is power, especially when it comes to finances. The more we know about how the system works, the better we can navigate it and actually reach those financial goals we have.
And it's not just about our own personal gain. It's also about creating a financial system that's fair and works for everyone.
That's a really important point. When we think about the future of finance, we can't forget about the human side of it. It's about people's lives, their dreams, how they make a living. It's about building a system that supports real growth, fosters innovation, and gives everyone a chance to succeed.
Exactly. So as we wrap up this deep dive, I want to leave our listeners with a challenge. Don't just sit back and watch. Be an active participant. Get involved, ask questions, and help shape a financial future that aligns with your values.
And don't forget, there's always more to learn. Keep exploring, keep questioning, keep pushing the boundaries. Finance is constantly changing, and it's up to us to guide its direction.
Well said. Thanks for joining us on this deep dive into the financial landscape. I hope our listeners feel empowered and ready to navigate this complex world to make informed decisions that shape their financial future. And that's it for this deep dive. Thanks for tuning in, and we'll catch you next time.